It's Market Day Report. We've had a rally going on here in the row crops. We started strong. Are we still running pretty strong? It's getting towards the final lap here, and we'll start with the corn market. And we're still in positive territory, but we've come off of the highs of the session. Now, that December contract for corn has been up 5 1/4 cents. That's the trade range there, from 4.94 1/4 up to 4.99 1/2. We trade roughly in the middle, 4.96 3/4, penny higher. But the point here is we're off the day's high here in the corn market, but still positive for the 9th straight session. And soybeans, well, kind of the same story. We're trading in about a 9-cent trade range here, 11.64 to 11.73 1/2 on the November. We trade 11.70 3/4 right now. That's up 3 3/4 cents. Quick stroll through the rest of this complex. Soy meal contracts are lower. Bean oil, triple-digit gain, 74.48 on the May. It's up 110 points. Wheat market, Chicago, and the July, penny and a half higher, 6.59 1/4. Again, off of the day's high, 6 1/2 higher on July. Hard red as it trades at 7.08 3/4. And one more here. How about the cotton market? Cotton's been higher the last 2 sessions, but lower now, down 68 at 80.43. Let's go to Chicago. Chris Robinson's with Robinson Ag Marketing. We're pulling off of the highs. What are we trading?
First of all, crude oil is back to 106. I think that's really what sparked this. But again, any port storm, it's a blessing. You've got November beans back up at its, I think it's a 28-month high, 11.74. We've failed there 2 or 3 times. Number 2, you've got D's corn at 4.99 1/2. I think if I told you back in January after that first USDA when we were down at 4.40 that don't worry, we'll be up at $5. You might have looked at me like I needed some therapy. But it's a great rally. I'm not calling a top. Everybody's looking now. It's funny when we're down at 4.40. Everybody's like, "Oh, what happens if we go under $4?" Now that we're at 4.96, it's like, what's above 5.12? 5.12 is the contract high. And Tony, I can tell you there's a lot of corn out there that's for sale at $5 because we can't get through it. Once we get through that, I got to imagine a lot of farmers have got prices out there to sell at $5. Once we get through that, we'll find out if there's anything above there. So a great opportunity. It's been a dismal, really 2 or 3 years as we watched corn hit, a 3-year slide. This recovery is a gift. You've got wheat leading us higher. You've got really good strength in all the row crops. You mentioned cotton. We began the year at 66-cent cotton. We're above 80 cents. So it's a great marketing opportunity. It's only the end of April. There's a lot of weather ahead of us. It's a great place to be considering where we were back in December. That's all I can tell you because it's a glimmer of hope. And even you look at it, December of 2027 corn, it's above $5. It's 60 cents off its low. So I think you've got money pouring in from the managed money, the speculators out there. They're trying to get in front of potentially, more inflation. So it's a good place to be considering where we were. And all I would say is this, and I'll be quiet. If you've not done something to reward these rallies, you need to get after it. Making a sale or setting a hedge is not calling a top. But if you don't care about 60 cents in corn, if you don't care about $1.20 in beans, I don't know what you do care about.
Yeah, good point. Chris, hang on. Quick break. Back with more markets on Market Day Report. From 246 to 256. Yeah, in some instances, we're seeing $10 higher here on cash trade. That's helped propel the April contract for live cattle to $255.95. It's up $3.27, 70 cents higher on the June. Deferreds here are now in the red. Over on the feeder side, we've been higher 4 straight sessions. We may not make it 5. as every contract in the red with the exception of the April, but it expires tomorrow. So 115 to 162 lower on every contract. One more market here, and it's the hog market. We are higher across the board. Chris Robinson's with Robinson Ag Marketing. Okay, thoughts here in the protein sector?
Yeah, we're a little bit lower. You say we're in the red, but we were basically at contract highs. June fat cattle, everybody thought that 252 was going to be a triple top. And here we are sitting at 255. The market just keeps shrugging off, 450 gallon of gasoline, whatever, 420 gallon gas. That argument it's like the boy that cried wolf, right? For a year and a half, we've been like, people are going to stop buying beef if it costs them $150 to fill up their gas tank. They continue to come for it. You did mention how strong cash is. That continues to go. I just talked to a client, I think the day before yesterday, and he went to a sale and couldn't believe what he got for his animals. So like everything else, Tony, though, it's always what you don't see coming is a risk for you. Back in November, we dropped $85 in feeders, basically off, headlines. Fat cattle dropped, $35, $40. So that's always a risk out there. But right now, the market's giving you a gift. We're a little bit lower in the feeders, but relatively, we're at contract high. So the story continues. We don't have enough cows, and the demand keeps holding in there. What's the risk? The risk is we open up the border. The risk is we get screwworm up here in the U.S. Then I think you see some repricing. And by repricing, it's usually people that are long cattle that shouldn't be long cattle that get out.
Yeah, good points as always. Chris Robinson's with Robinson Ag Marketing. By the way, Chris is also on Commodity Wrap. You've heard me say that quite a few times throughout the day. He's on Commodity Wrap every Thursday afternoon on Rural Radio 147 Sirius XM.